Every laptop you've ever owned came with a decision already made for you. You didn't choose the operating system. Somebody in Redmond chose it for you, years before you walked into that store. For 35 years, that arrangement never had to be questioned because there was never a real alternative sitting on the shelf next to it. That's about to change. And the people forcing that change aren't activists or hackers. They're the manufacturers themselves, the same companies that have shipped Windows by default since the 1990s. Something happened inside their spreadsheets that made them stop trusting the deal they'd lived with for 3 decades. By the end of this video, you'll understand exactly what broke, why it broke now, and why Microsoft can't simply buy its way out of this one. Welcome back to Behind the Tech. Here's a number most people never think about. Every time a manufacturer builds a laptop, before a single component is soldered, before a single screen is attached, they've already written a check to Microsoft for the right to put Windows on it. Industry analysts have put that per unit licensing cost anywhere from $30 to $80 depending on volume and tier. On a budget laptop selling for $400, that's already a meaningful slice of the retail price gone before the manufacturer has made a cent. But the license fee is only the entry ticket. Windows 11 arrived with hardware requirements that Microsoft controls and manufacturers have to absorb. A security chip called TPM 2.0 became mandatory. Processors that worked perfectly well got blacklisted overnight. Minimum memory requirements went up. None of that was optional for the people building the hardware. Microsoft wrote the spec sheet. The manufacturers paid the bill. Then there's the part nobody puts in a press release: the pre-installed trial software. The antivirus prompts, the subscription nags, the promotional app sitting on the desktop the moment you open the box for the first time. Companies pay Microsoft for that placement. The manufacturer doesn't see that revenue, but when a customer calls support furious about a pop-up they can't remove, that call goes to the manufacturer's call center, not Microsoft's. One side collects the money, the other side eats the phone bill. Keep that split in mind because it's the seed of everything that happens next. Dell has quietly sold Ubuntu Linux versions of its developer laptops for more than a decade, a program that started small and never went away. Lenovo has been offering Linux configurations on its ThinkPad line since at least 2020, and as of last year, some of those Linux models were listed on Lenovo's own US and Canadian websites for well over $100 less than the identical Windows machine. Same aluminum, same processor, same screen. The only difference was which operating system Microsoft got paid for. HP went further back in 2022, releasing a laptop called the Dev 1, built with a smaller Linux-focused company called System 76, running an operating system called Pop_OS instead of Windows. It wasn't a fringe experiment nobody noticed. It was HP, the second largest PC maker on the planet, testing whether customers would accept a machine with no Windows tax attached at all. None of these companies announced they were declaring war on Microsoft. That's the part people miss. This isn't rebellion dressed up as ideology. It's finance departments running the numbers and discovering that a meaningful slice of their customers don't actually care which logo appears at startup. They care whether the laptop works, boots fast, and doesn't nag them. When that's the customer's only bar, removing a $30 to $80 line item off the cost sheet stops being risky and starts being obvious. And here's the part I'll come back to later in this video. The reason none of these companies moved loudly, one at a time, is the same reason none of them can be punished for it. But to understand why the timing accelerated so suddenly, you have to look at a deadline that had been sitting on the calendar for years. October 14th, 2025. That's the day Windows 10 officially stopped receiving free security updates for hundreds of millions of people around the world. That date forced a decision nobody wanted to make. Buy new hardware that meets Windows 11's requirements. Pay for extended security support. or keep running an operating system with no more security patches, hoping nothing bad finds you. Microsoft's own investor filings tell you what happened next, and this is the part that should surprise you because it isn't a story about people abandoning Windows overnight. In the very same quarter that Windows 10 support ended, Microsoft's Windows OEM and devices revenue actually went up slightly as a wave of people replaced aging machines with new Windows 11 hardware. That's the predictable part. The upgrade cycle worked exactly the way Microsoft designed it to work. But 3 months later, in the following quarter, that same Windows OEM revenue line turned negative. The bump was temporary. The replacement wave crested and then rolled back, and what's left underneath it is a slower structural shift. Fewer manufacturers assuming Windows is the only shelf item worth stocking, and more of them testing what happens when it isn't. That's not a headline moment. It's quieter than that. It's a 5-year erosion disguised as a 1-quarter spike, and it's exactly the kind of shift that doesn't show up until you're looking at the right two numbers side by side. Now here's where the story stops being about laptops and starts being about something much bigger. On January 29th, 2026, Microsoft's stock dropped nearly 10% in a single day, its sharpest one-day decline since March 2020. $357 billion in market value gone before the closing bell. What makes that drop strange is that Microsoft's actual results weren't bad. Revenue was up 17%. Azure, the cloud business everyone watches, grew 39%. By almost any normal measure, that's a company performing well. So why did investors punish it? Because Microsoft had spent close to $38 billion in a single quarter building out AI infrastructure and told investors capital spending for the year would climb to roughly $190 billion. $38 billion is more than most Fortune 500 companies are worth entirely, spent in 3 months on a bet that hasn't paid off yet. Meta reported its own AI spending the same week and its stock went up. Microsoft reported nearly identical spending and its stock got crushed. The difference wasn't the spending. It was whether investors believed the spending would ever come back as profit. And underneath that stock drop sits something even less comfortable for Microsoft. Multiple law firms have since filed securities class actions on behalf of shareholders, alleging Microsoft made misleading statements about how well its Copilot AI assistant and Azure AI business were actually performing. No court has ruled on any of it, but the fact that it's being litigated at all tells you the gap between what Microsoft was promising investors and what it was actually delivering had become wide enough for lawyers to build a case around it. Copilot itself is a case study in that gap. By early this year, Microsoft had roughly 15 million paid Copilot seats. That sounds like a lot until you remember Microsoft has hundreds of millions of Office users worldwide. Even by spring, after months of pushing the product, that number had only climbed into the low 20 millions. Microsoft bet the entire future of Windows on artificial intelligence adoption, and adoption is arriving at a fraction of the pace the spending assumes. So here's where the two halves of this story connect, and it's the part most coverage misses because it treats the OEM story and the Wall Street story as separate news items. They're not. They're the same mechanism working at two different altitudes. For 35 years, Microsoft's dominance was never built on people loving Windows. It was built on people never being asked. The default was the moat. Manufacturers shipped Windows because customers expected it, and customers expected it because it was simply always there, sitting on the machine before they'd made a single choice. That moat only holds as long as no manufacturer breaks ranks. If Dell alone drops Windows pricing leverage, Microsoft can retaliate, quietly cut marketing co-op funds, adjust licensing terms, favor a competitor in the next negotiation. But when Dell, Lenovo, and HP are all testing the same math within roughly the same window, Microsoft loses the ability to punish any single one of them without appearing to punish the entire industry. It depends on for distribution. That's the quiet leverage shift nobody announced in a press release, and it's exactly why this moment looks different from every other moment analysts have prematurely declared to be the end of Windows. Meanwhile, at the corporate level, Microsoft is pouring a historic amount of capital into a bet that artificial intelligence will become the next default, the next thing customers never had to choose because Microsoft simply put it there first. Windows becoming what Satya Nadella has called an agentic operating system, one that anticipates your needs and takes actions without being asked, is Microsoft trying to build a new moat before the old one finishes eroding. Whether that bet pays off before the capital spending catches up with them is genuinely still an open question. And it's one I'm going to dig into properly because there's a company sitting right behind Microsoft in artificial intelligence that most people still underestimate, and its next move changes this entire calculation. That's a story for its own video. If you want to see exactly how that piece fits in, subscribing is the easiest way to catch it the moment it goes up. Strip away the drama, and here's what's actually true. Microsoft did not lose the PC market. Nothing close to that has happened. Windows still ships on the overwhelming majority of non-Apple computers sold today, and that isn't changing next quarter or even next year. What has changed is quieter and, in some ways, more significant. The absolute certainty that used to sit underneath every manufacturing decision, Windows goes on it, full stop, no discussion, has cracked. Dell's decade-old Linux program is no longer a niche developer curiosity, it's a pricing lever. Lenovo's Linux discounts are no longer a rounding error. They're a documented, growing line item. HP's willingness to ship a mainstream laptop without Windows at all in 2022 would have been unthinkable a decade earlier. None of that happened because Linux suddenly became easier to use or because customers developed a political objection to Microsoft. It happened because the economics of the Windows tax stopped being invisible. Every dollar Microsoft collects upstream in licensing and hardware mandates is a dollar the manufacturer has to justify to a customer who increasingly has other options and increasingly doesn't care about the logo. And at the same moment that pressure was building from below, Microsoft made the single largest capital bet in its history on artificial intelligence. A bet Wall Street is now pricing with real skepticism, not blind faith, as the January stock drop and the shareholder lawsuits make clear. That's the honest version of this story, not a monopoly collapsing overnight, but a 35-year default finally being asked to justify itself on merit at the exact moment the company behind it is spending more than it's ever spent to build the next one. Whether Microsoft wins that next round the same way it won the last one is the real question. And it's one we're going to keep tracking on this channel. If this kind of corporate history is what you come here for, there's a lot more of it waiting in the back catalog. See you in the next one.